It is 3 o'clock in Geneva. It is 3 o'clock in Netherlands, and I will ask Marcel to pronounce my co-speaker to pronounce the name of the city he is in now. But ladies and gentlemen, we start credit chats. I believe everybody is comfortable, and I pleased to introduce my friend and co-speaker Marcel Wiedenbrugge, who is the original author of the Happy Customers Faster Cash concept, which is more or less the main topic of us to discuss. Hello, Marcel.
Hi, Andre. Good to see you.
Thank you
from
very much for
Utrecht, by the way. You asked from which city I am. It's Utrecht in the Netherlands. It's for people who don't know the Netherlands, or, well, at least is not familiar with Utrecht, is almost right in the middle of the Netherlands. So very centrally located.
Geographical center of Netherlands.
You may say so, yeah.
Okay. So, first traditional question of credit chats and all of our airs for the co-speaker and for you. As sounds quite simple, so in the most simple term, preferably in one sentence or two sentences, you can use as many of them as you believe correct, but let's say shorter version of you is, the question is, who do you feel you are? Or whom you feel yourself?
That's a very deep philosophical question,
but in professional wise.
Let's stick to professional. Professionally, I see myself as a person with knowledge and interest in multiple fields of related fields, not just credit management, but also customer service and sales. The whole aspect of business processes. These are things including optimization and automation. These are all topics that I find interesting. So you may say that I'm multidimensional in terms of knowledge and experience.
Good, good. You know, this question came to Credit Chats by one of the co-speakers.
Okay.
And I found it is interesting because, you know, I can speak about you for hours, if not days. Because we did so many interesting things together, and you know, but one thing, it was said by the way by your colleague who is a salesman, and he said, once I've asked my colleague, what do you do or who you are, he said, I'm selling yachts. That's clear. You know, no, he didn't say selling, he said, I'm making yachts. That's pretty short explanation about what this guy does. You know, I shorten, you know, all of my designatory letters and all the things like that to the word creditologist, because I know the credit is, you know, most part of a significant part of my life, and I just decided to cut this everything to one word.
I have one word, if I may interrupt you, Andre. Is I call myself valuepreneur. Is the combination of creating value and entrepreneur. So for me, if I want to add value with my services and the things I do in daily life, if I want to make some money with it, I need to add value. So value can be added in my field in terms of the experience you have, the ideas you have, and also the knowledge you have, preferably combined with a lot of let's say in my case, from different backgrounds. So if you talk to me, you can not only talk to me about credit risk management and communication, for example, but you can also talk about automation, or you can talk about customer service, or you can talk about sales with me, or marketing. And also, I can make a relationship between those two. And I think that is one of the most important things, which I also find interesting, by the way, about credit management, that you can look at it from so many angles. But you have to connect them. If you don't connect them, credit management is extremely boring, and also it cannot also be less beneficial in my view.
I think this is our trigger point of today's discussion, because our advertised topic is quite simple: how to keep customers paying. But before we start, I would like to share just one slide.
Okay.
Just one slide. I will just open it, because You know, as a matter of preparation to today's event, I started a short questionnaire on LinkedIn,
Mm-hmm.
and I just decided to verify what I understand, whether or not I understand correctly, because I was asking this question several times from I was asking, I mean, I cannot find this picture. Ah, yeah, it is here. So I was just asking whether credit managers should be proud of money collected, or we should be proud of or should we be proud of money which arrived on time?
Well, we can have a discussion in general about it, and maybe when you find the right result.
Here is this slide. I believe you can see it now. So just like whether
I cannot see it so you have to tell it to me.
I mean, I just started the research. Okay, I started to research on a poll on LinkedIn, and I just asked what credit manager should be proud of. And then there are two options: collected overdue and cash arrived on time. And 17% answered that credit managers should be proud of cash collected. And 83% of 175 respondents responded that the correct answer is cash arrived on time. So the real job of a credit manager is to make sure that cash arrives on time, because I mean, I believe this is relevant topic to what we do today.
I agree.
Because to me, my position is pretty simple, and my answer was absolutely clear. Credit manager is to ensure that customers pay on time, let's say, as it was said in credit management handbook, reasonably around due date. That's my understanding, yeah, because if we have to, I mean, I always do a contrast example, drastic example. If we have to collect every single invoice, this would be extremely expensive for the company. Just like that. What do you think about this? Whether or not we should collect, or should we credit managers make customers paying on time?
Well, let me put it this way. I agree with the basic concept that paying on time, making your customers, or not, that your customers are willing to pay on time. Maybe you can put it this way. Depending, of course, on the payment terms and the way how you collect the money. If you have direct debit, it will be easier. But if you have, let's say, if you do business on open account, right? Let's say 30 days. If all your customers, suppose you have 100 customers, and they all pay you on time, let's say within those 30 days, that means that you have, in between marks, that you have educated your customers perfectly. Because apparently they find your products and services so important that they are appreciating the relationship with your company, and that they, as a result, that they will pay you on time. That is ideal. In reality, I never experienced that, by the way. It's something, well, let's say, so many people, so many different kind of behavior. But in my view, credit management, a very important part, apart from risk assessment, especially at the initial stages, but also during the customer relationship. So the active phase, where you actually do transactions. But a very important element in credit management is customer relationship management. So absolutely, part of that is communication.
Well,
how do you communicate? How do you build a relationship with your customer? And that is, well, my experience for people who are watching this, my experience is primarily in business to business. That makes a big difference between business to consumer and of course. Because in business to business, you develop individual relationships with customers. Simply because it's worthwhile, but not always worthwhile. So, again, I think it is extremely important to have this very basic understanding that in credit management is a typical, what I would define it as a typical integrated function where it is extremely important to work on a daily basis on positive actions towards customers to make sure that they are willing to pay on time. They also must be able to pay on time. And that means that in the role, if you are a credit controller or a credit manager, it doesn't matter. If you have that position, that is the most important thing, that you are interested in other human beings from a business point of view, and that you are willing to spend a little bit of time in developing relationships.
Well, what could we achieve in what could we achieve with other organization or with other people without proper communication? And just echoing what you just said, because yeah, I completely agree with you that credit management is an integrative role, because you need to integrate accounting, treasury, sales, customer service, and others, and you're supposed to be able
and the customer, Andre.
and obviously customer, and you need to face customer, you need to communicate with the customer, and the thing is, but here we are coming to an interesting topic. And to an interesting part of that discussion. What should we appreciate more? Relationship as they are, or money? Ladies and gentlemen, while Marcel is thinking about his answer, because I have to answer this myself, but I also invite you to ask questions, to type your questions, to type your comments, and we will be answering them over the air. And today we have only 1 hour together with Marcel. As I already said to Marcel before the beginning of today's event, that, you know, for us 1 hour is nearly nothing, but we try to do our best. Normally we speak with Marcel for 2-3 hours, but that's okay. It's just because we like to speak. But coming back, relations themselves or money, whether or not money could replace relationship, or should they replace relationship, or this is both, which is also an answer, because my answer, if you ask short version, it should be relations and money. Money are relations, relations are money. Just like should we choose?
Well,
I don't believe there is a choice.
Let me try to explain. I mean, I'm at first I would say the relationship is always important, no matter if people are paying you or not, because you never know how you will find each other in life somewhere later in time. Suppose that we will develop a bad relationship because you don't pay me, and I become nasty on you. Then ultimately, maybe you will pay me, but after that, you never want to talk to me again. You say, Marcel is a very uncomfortable, very nasty person. I don't like him, right?
Yeah.
So it is important that you always try to, is my personal experience as well, no matter what the situation is, except when you are a professional fraud. That's a different situation.
A professional who?
A professional fraud. So if you are doing business because you are a criminal or whatever, there is no limit. There's no limit for me. But let's not go into that direction.
Let's stay aside of. Let's say
we have a normal relationship.
As a very famous character in Russian-speaking literature, I would say, let's respect. Or I always respect criminal legislation, okay? So we will speak about that. So what is criminal? It's absolutely different, rules of the game. There is game there as well, but it is absolutely different from that.
Let's avoid the criminals, okay?
Yeah.
But in general, I say relationship comes first, money comes second. However, and that is an important element which you did not address, is time. How much time can I spend on you? So I can still be friendly, but maybe I'm only able to spend 5 minutes on you because you are not an important in terms of profitability. Directly or indirectly, you're not an important customer to me. And given the fact that the amount of time is limited, I do not have all the time in the world. My time is limited, so I need to divide that time over all the customers I have. So there I have to set a priority. So if you are a very large customer to me, then the relationship is, of course, is important, but I also will spend more time on you. If you are not a very important customer to me, the relationship is still important because I don't know, maybe you are indirectly very valuable to me because you tell positive stories about me or about my company. But from a financial point of view, I can spend less time on you. So that's basically how I look at, well, how to deal with the equation, profitability, money versus relationship.
Well, we need to, I would include to that perspective of a customer. The customer could be small today, but could be big tomorrow. Yeah, and also for the big customer, if you established everything properly, you don't need to spend too much time on really on customer, or really on working on current issues, but better on perspective and discussing. But what I used to say in the concept, by the way, of happy customers, faster cash, I always say that credit managers should dedicate more time on customers who pay on time to maintain that relationship and that attitude to discuss perspective, what else company could do for them, and so on and so forth. So making sure that if the culture is already built, they pay on time.
I can speak from experience. That sometimes takes a lot of time because we are talking about payment behavior. So,
okay, let's discuss payment behavior because.
But Andre, in the past, I had customers who officially they had to pay within 30 days, and in reality, they paid me in 60 days.
Why? Let me ask you why.
Because they think they were in a position to do that. They think they were.
Why they are in position to do that?
They think that they were very important, and as a result, they were. And customers have all kinds of excuses to pay you late. And in this case, what I can remember, I will not mention any names, of course. But
no names. This
will not mention any names. Never.
Principles. Yeah, we discuss only principles. Yeah,
it's about the basic principle. But in this case, the customer said, "Yeah, we are a very important customer, and we pay all our suppliers on 60 days, so we make no exception to you." And well, I remember that it took. Well, let's say we were very consistent in our approach, and we try to massage the customer, if you may say so. We try to influence this behavior by very gently moving towards that 30 days. So by starting with friendly reminders and overviews and blah, 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 and those kind of things, it took us more than half a year to improve that payment behavior, what I can remember, from 60 days to on average 45 days. That's already a big result. Customer was very cash flow positive. So money was not the issue. Behavior was the issue.
Again, I mean, as we share experience here, I think the biggest issue, or the biggest problem with the customer payment behavior is actually, let's call it, under delivery issues when customers deliver it wrong goods, wrong service at wrong time with wrong documents and so on and so forth. That's what we know perfectly. All this is where we are not, we ourselves as customers won't be in position to pay at all, or at least in position to pay on time until everything is corrected. Like if we order something online and the wrong goods delivered, and if we pay afterwards, if it is post-payment, sorry, we won't be paying until we got what we ordered. This is one thing. But then second thing, which is most important, is misunderstanding or different understanding of credit terms. To me, this is one of the greatest issues. I mean, we start collect before we, or our colleagues, people start collecting cash and try to collect cash before the common understanding between sales, finance, or let's say company and another company and the customer have been established. And this is one of the biggest issues among companies. We wrote a contract where it is signed 30 days, or we believe our standard terms is 30 days. And we delivered goods. We didn't take any single, any spare minute to discuss with the customer what are the payment terms for this transaction, and then what we've got. Customer pay according to the terms they believe is correct. We expect money at the due date we believe is correct, and there is a gap. So enough time spent in the beginning. I got very drastic example on that. I share it very often. It was in the corporation. A credit manager has been sent a credit request to change credit limit, to establish credit limit and credit term, because management of the company already signed that. Well, he said, okay, I won't be, you know, disputing this because it is already signed by the management. So I established the credit limit and the credit term. So it was quite big credit limit and quite long credit term. And what is interesting, it was saying 90 days payment term. Let's say 15,000 or 15 million or 150 million, doesn't matter. 15. Okay, so then 90 days passed and the customer comes with another order. Didn't pay before, so the credit limit, in 90 days, the credit limit was fully consumed. And 90 days passed, and then new order comes, and the credit manager, this new order is blocked just because the credit limit is fully consumed. And the credit manager calls this team who brought this customer and said, we believe that it's just the right time to pay. I mean, we are not allowed to ship this order because the credit limit is fully exhausted. And customer has to pay. Said they won't be paying. Why? Because it is not yet due date to pay. But you brought this document. Then they finally found the contract with the customer which says that 90 days presented to management in reality were, because 90 days, what do you understand under 90 days? 90 calendar days from shipment date, or maybe from invoice date, but this is normally plus minus 2 days. Yeah? And in reality, this delivery contract was 90 calendar days. Sorry, 90 working days from delivery and inspection. And delivery from Switzerland to somewhere to the area around Hong Kong, Taiwan, and this everything closer to China. So in reality, that was 180 days or equivalent. So, and you know, customer is quite powerful. You cannot, you know, really push on them. But that's what I'm trying to say. So timely payments start from clear and common and synchronized and aligned understanding of the credit terms. And if there is a difference in this understanding, we would never get this timely payment. So working on common understanding on top of relationship, on top of removing all the obstacles from the way of cash to company's bank account, which to me credit management is some kind of philosophical view. This is one of the most important steps. So we work on credit on terms in order to establish timely payments and keep customers paid.
But you are addressing, if I may respond to this, there's one thing, especially from a sales perspective. If you are involved in sales, and I've been involved and still am involved in sales.
Yeah, I'm involved in sales every day.
I'm involved in sales every day myself.
Yeah, sure.
The payment terms, I'm very well aware of who I'm talking to in my current role. So I know my customers. Not all of them, but most of them I know quite well. But one of the showstoppers in a process where you still do not have a signature on a contract, on a sales contract, is to spend too much time. And I know how important it is. I always spend a little bit of time on it, but you don't want to see the payment terms as a showstopper. However, in international transactions, I think it's more important because the whole effort to get paid, if you're doing business abroad, so you are exporting products, it's the same like if I export products from Netherlands to Switzerland, for example, that's still in Europe. I mean, it's still within, let's say, an area where I feel comfortable. However, I'm not familiar with local practices. So it is important to have a very clear understanding with people I don't know very much in detail who they are. I don't know their history. I only can know them from credit reports, and I can find information on a company, but I don't know anything about their behavior. That it is a topic which I would address more specifically. I mean, but I first, from a sales point of view, Andre, if I may say, the first thing which I find important as a salesperson is that I'm sure that I will close the deal. Because if I haven't closed the deal and I start talking about the payment terms, I'm not necessarily saying that this will be negative. It doesn't have to be negative, by the way. But I also don't want it to be a showstopper. I first want to have the signature. And that's, I think, what is happening in sales a lot. And discussing terms, payment terms, it's much more interesting in talking about, well, what kind of products or services are you delivering to your customer? How much will he pay you? Those kind of things. And do not forget in sales that, depends on the type of company that you're working for. Salespeople usually work for a bonus also. So they have fixed salary and a bonus. And, if it's a big deal, why talk about payment terms? If you can collect.
Well, it depends. It depends to me. And then we got payment issue. And then we got showstopper in terms of delivery because customer doesn't pay. And then we got all this everything which reduces salesman bonus. That's what happens. My understanding is a bit different, although yes, I understand that the salesman and the one who is speaking with the customer and convince them to use our products to satisfy their needs, which my understanding sales is that pretty simple. The salesman supposed to know payment terms before he opens his mouth and enters the customer's office.
Mm-hmm. Well, I will not disagree with you, Andre.
It depends, and it depends a lot on the way how it is organized within the company. Because we got quite many examples when the supplier of glasses for iPhone signed the contract with Apple and then went bust, just because they overestimated their capacity, their financial capacity. in payment terms, and in terms of delivering, and in terms of price, in terms of everything. And there are many cases like this. They wanted to catch a big fish, and then this big fish ate themselves.
Yeah.
That this is the thing. So I understand the position of a salesman, because I work on them. And yeah, show this book, please, to Russ.
Well, I just want to show you, or show the audience, people are watching.
Yes, please.
You know, I wrote a couple of more books than Happy Customers, Faster Cash, but another one is this one. Yeah? Maybe you can see it. You see it probably, you see it in mirror. But anyway, title is Customer Profit Hacking. Customer Profit Hacking is actually a book which, well, you know, it's published in 2016. If there is one book, of course, I'm proud about Happy Customers, Faster Cash, because that was quite an effort. But this book is from let me put it this way, from an intellectual point of view, I think it's the most interesting one, because it is a clear attempt to merge concepts from finance and concepts from marketing, sales, and credit risk management into one consistent methodology. And that's what I describe in this book. And one of the key concepts in this book is about customer value. So before I continue, because I can talk for ages about this book, of course, but if I talk to you customer value, can you give me a definition of, we will not go too much into definition, but if I ask customer value, what is your first response to, what does this word, these two words, what does it mean to you?
Well, let's assume I never read your book.
That's a shame.
I have never read your book. If we say a customer value, I would say, okay, let me use a definition like discounted free cash flow for the near for years. kind of this. So what is the prospective sales? What is the prospective profit with inclusion of credit risk?
You should really read my book, but okay. Anyway, just to make it very simple, because we are in an online meeting, so I'm not giving any training on this here, but basically customer value consists of two elements, namely customer profitability on the one hand, when you look at it from a perspective of the supplier, so the seller, against customer satisfaction. And you look at it, this term, you look at it from the position, from the perspective of the customer himself. So basically you have an equation between customer profitability and customer satisfaction. That means if you put that into a square, into a square model, right? You have four quadrants. So you have on the horizontal axis, you have customer satisfaction, right? So on the very right corner, customers are very happy. On the vertical axis, you have customer profitability. So if you are on top, you have a very profitable customer, right? In the upper left corner. So if you combine them, now you have four types of customers. So the first one is in the upper right corner, you have partners. Partners are, and you have different degrees, of course, of profitability and satisfaction, of course. But partners are basically customers where there is a good balance between customer profitability and customer satisfaction. In the ultimate case, you have very profitable customers who are also extremely happy with you. That's the ideal situation. The thing is, of course, that life, just like in business, is dynamic. So you need to keep it that way. That's the difficulty in this whole thing. So the model is dynamic. It's not static. And then, of course, you have on the upper left side, upper corner, upper left, you have the potential defector. These are customers who are very profitable, but actually they're unhappy with your products or services. So they will leave you in the future at a certain moment in time. And that means that if you do not change your course of action towards that customer, you will lose profitability in the future. And then, of course, you have in the left, the down left corner, you have passerby. That's a passerby. These are new customers you don't know if they will become profitable or not. So that's a question mark for both sides. But it is important to have a good understanding of them. And then and that's also is a bleeder on the lower right side. you have the profiteers. And profiteers are customers who are actually very happy with you, but you don't make any money on them. So they cost you a lot of time, and that time goes at the expense of past customers, for example, partners who are profitable. So in this way, if you analyze your customer portfolio and you put them into this into one of these four elements, that means that you need to have an understanding. First of all, you need to have a definition of profitability. What does profitability mean? How do you calculate it in your organization? And that is already, there are a lot of elements to it. I will not go into detail. And the other thing is about, well, we do not discuss it very much in detail, but how do you measure customer satisfaction? What are the elements that are important to your customers, and how do they value you? And once you have that and you start to implement that in the organization, then over time you can see how your customer portfolio is developing. Yeah? Basically, you may also apply this to what I personally also like is risk reward thinking. But
what's the place of risk in this system?
Well, risk is very important, but you have to define it. You need to understand how risk plays out for your company. I mean, risk should also be.
Let's say credit risks, because this is the whole bank risk.
Credit risk, payment risk. If we focus on those two elements, then of course you as a company you have to define for yourself what kind of risk am I willing to take if my basic way of doing business with customers is on open account. So suppose, Andre, you are a new customer and you want to do business with me, and you place an order of 50,000 euro. How am I? And this order is very profitable because the costs I have to make for this order are extremely low.
Okay.
So I make a gross profit of 45,000 euro on your order. That's very attractive. I am, from my position, I'm more willing to take risks because if I suppose you don't pay me, the maximum loss is 5,000 euro, right? That's acceptable. But if I'm in a business sector where profit margins are very minimal, then I need to be much more strict in terms of do I want to accept doing business with you. That is also something where people sometimes forget. Therefore, that's why it is important to have a very good basic understanding how you calculate profitability on a customer level. It's more complicated than most people think. And
absolutely.
A lot of organizations do not have the systems in place to make that calculation on a very short notice.
Well, I will explain a kind of, let's say, I don't believe it would be opposite paradigm, but it is different a little bit in terms of, let's say, philosophy. Since we mentioned credit risk, because the thing is, since we all have to compete, there is a very limited market space available to companies who want to choose their customers, including their choice by credit risk. There would be a lot of customers who are willing to purchase their products. I mean, there is. Let's make one step back, and I will try to explain. There are 90% of transactions in the world happen on credit terms, which means that 10% of sorry?
In business to business.
Yeah, in business to business. So 10% is sold on the cash in advance. Then, to my observations, about 15% of companies, or 15% of transactions, are those who happen on the credit terms dictated by sellers. So about 25% of the company are those who either don't enjoy this luxury of not providing credit terms, or enjoy the position where they can dictate credit terms, but other 75 have to compete. And then it's a quite interesting question, because credit risk is always on the opposite side of the competitiveness. So you have to compete. So you have to provide credit terms. You cannot come. It's very, very visible. It's very visible when I speak, to companies, let's say in Ukraine. They work in Ukraine, they're able to work, let's say, cash in advance basis. It was more or less okay. Then they go to Western Europe. And when on the very first negotiations they come, they say, we would like to say that these companies in Western Europe, they look at their product, everything's good, everything's right. And then they discovered that there would be no prepayment. They have to provide 30 days payment term, otherwise there is no deal. And then, what I try to say, in terms of philosophy, it's not a question of providing credit, it's not a question of granting credit or deciding to grant credit, yeah? And it's not about risk taken and how much risk you would like to take. It's a question how much risk you have to take if you wish to make this business. And then it's a question whether or not you can afford it, whether or not you got system, whether or not you at least understand the risk you take. Because customers who say we would like to have 30 days because we ask all of our suppliers for 30 days could be technical bankrupt. And that's your problem as a supplier to define that.
Yeah.
And this is where the whole credit management story starts. How much risk your company have to take in order to compete successfully. And then we're supposed to adjust this profit we already making with the profit, with this theoretical profit when we sign the agreement, when we define the potential profit of the customer, we adjust. We're supposed to adjust it with risk and understand that we might lose all this money, every given day. I've seen a customer it was quite interesting. I was consulting a company in Ukraine. They have to close. They closed 5 offices around the globe because they went bankrupt just because all of their customers went bust at the same time. They've lost all of their receivables portfolio. And they simply understood that we did financial analysis. And we understood, so I did it for them. And we see that all of our customers are not very credit worthy. But for us, the choice was either we take this business with this high credit risk or we go out of this business, which was not an affordable option for us.
Andre, you're now going into an area which is basically far away from credit risk management.
Why?
You're going into an area, it's about strategy, it's about product development.
This is where credit risk management is happening. Honestly.
Well, let's say they are not directly involved. I mean, I can also speak from experience. I mean, product development is a totally different department from finance. Totally different from more operational departments such as credit management or credit risk management or non-financial companies, right?
We will speak only about non-financial customers, but okay, let's.
But let me put it this way. In my experience, you as a company, you need to have a very clear understanding of your position in the market.
Sure.
Why I spoke at the beginning of this conversation, why it is, and why I maybe call myself valuepreneur, why it is so important to have a good understanding of the value of the products and services that you deliver. I do not believe in, of course, there are certain markets which are very transparent and where you have multiple suppliers who offer more or less the same kind of services. What you get is, of course, is a very fierce competition on price, right? But that's why it is important as a company that you try to find a niche market, even within a bulk market, if you're operating in a bulk market, and say, well, what are your unique characteristics that make you special in comparison with other competitors in that market? And just from my own experience, I developed some training programs. They are very specific, and And I've done business with some large companies, which we will not mention by name, by the way. And large companies have professional purchase departments, right? Or
Yes.
payable departments. And they like to send them their terms to use. Say, oh, you want to do business with us? First of all, we need to register all your information, blah, 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 who you are. And you also need to sign the terms. Well, the first thing which I always do, I've worked for large companies. The first thing I always do is I look at the payment terms that are in such contracts and the invoice terms that are in such contracts.
Sure.
Yeah. So, and if I see a payment term of 60 days, I say, well, you know, I do not mind to sign your contract, but there are a couple of things which I would like to adjust. First of all, I would like to adjust something in the invoice. Now, the invoice usually is okay, the way how a company needs to be invoiced. But the other thing is the payment term. I never do business on 60 days, never. They say, you know, if you want my services, that's okay, but we're going to do business on maximum 30 days. Otherwise, I don't do it. You need to have that luxury to say no to certain deals. But I do not accept every suggestion from buyers who say, oh, I want to have your services, but you have to pay me on 90 days or 60 days. Well, I simply don't do it.
100 days? Why not 180 days? I mean, I always ask for explanation for.
I know in the supermarket world in Hong Kong, for example, 180 days is common.
Well,
but, you know, but let's be. We have a discussion, Andre, about this.
Yes, sure.
Let's be honest, as a professional, I think that is ridiculous.
Absolutely,
it is completely out of your mind. I mean, how can you do this? You know, large supermarket chains who maybe have small suppliers and say, oh, you want to do business with us, you want to sell your products in they sell on a daily basis. And they have the guts to sell on 180 days. I think that's a shame. It is something that should be forbidden.
I mean, that's what happened forbidden in Western Europe, because these credit terms have been restricted to 60 days. But that's only in European Union. The thing is, these 60 days or whatever payment term is actually supposed to have an explanation. What is the explanation behind this 180 days? Just because we can, it's not acceptable. But so many credit pros say we simply follow the customer. To me, this is shame. To me, this is shame for the credit pro, because terms is to be, and what, by the way, Susan mentioned as product development really should include terms, because credit actually forms part of the product package. The only answer I could give to that is absolutely nothing else to add. Nothing, absolutely. These credit terms, when we launch the new product, credit terms to the trade is to be part of this product development
I agree.
And with inclusion of credit risk, by the way.
Yeah.
And the thing is, so we started from that because, you know, mentioning, building relationship with customers starts. That's why I mentioned that in the very beginning, because that's part of, let's say, my theory. We could have timely payments only when the terms in the contract, all terms, including credit terms like credit limit, like collateral, like credit term, and many others, maybe discounts and everything, stay adequate to our business. So we don't work, so we as a supplier are not in loss-making position. Adequate to the market. Yeah, because if, for instance, let's say services in quite simple things, services in Western Europe normally deliver it on 30 days credit term. Nearly everything. So by default, you got 30 days. Unless there is real doubt about your risk, normally you got 30 days credit term. And then
depends on the sector, by the way.
Sorry?
It depends on the sector in which you're active.
I mean, that's what I found. It was kind of surprise to me in Switzerland. You know, you come to doctor and then you got invoice, which is normally payable in 30 days.
Yeah, but you know, I've been I've worked for in the past for a small supermarket,
Yeah.
a very small individual supermarket.
Yes.
We had a lot of suppliers, and most of them were on payment terms, direct debit within the same week of delivery.
Could be the case.
If you are on a daily trade basis, so you work with perishables like vegetables or bread or whatever, those kinds of things, dairy products, this is very working capital intensive. So in this case, also, shops, they do business on a daily basis. They get a lot of cash from customers on a daily basis, right? So therefore, those wholesale traders, they want to get paid within a week.
Yes, what I'm trying to say, let's call these as customary terms. Yeah, for instance, for the certain product on the certain geographical territory, there is a custom that for this type of product, these products are normally traded on 30 days credit term.
I agree.
You cannot come to this market with cash in advance terms because people won't be speaking to you. They won't be
unless Andre, unless you have something that is so special that no one else can deliver it, right?
Absolutely.
So that's why I say know your customer, know your market, have a good understanding of your position in the market. What is something? It's just like if people are talking to me about payment terms. I know what the value of the products I'm selling, what that is. So if I have never made any thoughts about it, then I say, yeah, it's 30 days, and then the customer says, oh, it's not acceptable. We are used to paying on 60 days, for example.
Yeah.
Being professional in credit as a company. If you have a credit management department, smaller companies don't have a credit management department. But suppose you have a credit management department, means that this kind of situations you need to think about them upfront. You need to have a basic understanding. If people come to you and say, "Oh, Andre, we would like to have your advice as an expert and consultant, but we pay you on 60 days," then you already, of course, you are a bad example because you are already experienced. But suppose you are a trading company, then you already must have a sort of a basic answer. If you are willing to accept this, yes or no.
Sure. This is where we've lost. Actually, we left our sales guy who comes to customer and speaks to them and discusses the credit terms. So in order to get very quick signature with the customer, a salesman supposed to know this every single thing. Why credit term is like this? What range of credit terms is acceptable? Where are the limits? How much they are adjustment? What is the adjustment to the price? What is the relationship between credit term and the price, and so on and so forth? And when this single or this important salesman comes to customer's office, he is not calling. Each time there is money mentioned, he takes his mobile phone and calls credit manager, whoever it is. He's already prepared. This is where we come into fast sales, satisfied customer, and adequate credit terms incorporated into contract. What is really important is that when we say relationships, because it's all about relationships, business is about relationships, we cannot avoid it. The thing is, we know that if we signed a contract on, let's say, 30 days credit terms 5 years ago, this is not a guarantee that these 30 days or this credit limit of $1 million or this requirement of collateral, like a bank guarantee or insurance or whatever it is, will stay adequate to us, customer and market forever. And we have to adjust it. So this means that we have to listen to the needs of our customer. And we need to keep an eye on what is on the market. And we need to adjust that, discuss that with the customer at the right time and adjust properly. To me, this is exactly what does that mean, being a credit manager and building relations together with sales. And obviously, take care of what is written in Happy Customers Faster Cash. Because it is not that simply, push on customer and get payment. Yeah, you need to do something else.
There's a lot involved in it, and it also depends on your experience as let's say your experience in business. We are already quite some time in business and seeing a lot of things.
Sure.
And the more you see, the better you are able to make a proper judgment of a situation. If you're new in this business, in credit risk management, or whatever what you do within a company, there are a lot of things you need to learn about. Well, let's say what they don't teach you in university or school or whatever. Yeah, you will hardly find it in books, and if you find it in books, you are not able to make a correct judgment because behavior of human beings is always completely different than the so-called ideal situation.
Yeah, it's always.
I always say, people are for, let's say, maybe it's a wild guess, of course, because I'm not a psychologist or a scientist in this field. However, if you look at behavior of human beings, then let's say in terms of payment behavior, then probably or the way how they treat you, then maybe 90 or 95% is every time it's the same when you encounter that person. But it's the 10%, the 5 or 10% exception. Because that person woke up that morning and his or her partner made a quarrel, and then suddenly he received a letter from the tax office that they want to have a lot of money from them, and then something else happened, and suddenly the mood changes of this person. And then you call this person and are talking about outstanding invoices. These are
you might be in trouble for sure.
Yeah, these are situations where they can escalate. And, from your experience, I've been in a lot of situations where all kinds of situations where I had this kind of things, but I don't know that because people don't talk about it. If you argue with your wife, you will not tell that to me. But maybe I will notice that your behavior is a little bit different from the other.
Be sure you would never know what happens between me and my wife. I can guarantee.
Yeah, but it may impact. It may from a professional point of view, but it may impact how you're facing your life at that moment. And that is something which I think is in credit management. If you are in active credit management, talking to customers on a daily basis, it's very important to have this basic understanding that human behavior may differ from moment to moment and that you are always sensitive to this. So if a customer suddenly is very aggressive to you, in most cases it's not personal, but it's because something has happened in the background and we don't know exactly what it is. But basically, if you are empathic and try to get a basic understanding and what I learned, by the way, in practice is if you stay calm and friendly and just continue listening and say, okay, I hear what you're saying, and just don't escalate situations. I think that's one of the things I learned is during conversations on the telephone. Sometimes things may escalate, but it's important to have a positive ending always.
Yeah. The only thing I could do about this is just to confirm, because credit management is not possible without empathy and without understanding of customer issues, even collection. Collection of cash, on collection of overdue, to my experience, have never been a pushing of customers to pay. Collection of overdue was always a resolution of an issue, because overdue is always an issue. That's what we actually discussed 1,000 times when we were writing this Eastern Europe edition of Happy Customers Faster Cash. Finding a solution with the most difficult case, you're supposed to stay with the customer, listen to their issues, and try to find a solution. Now, therefore, somebody who is quite fresh to the profession, they come and start to collect and start to push on customers just because they don't know that real collections ends up not with the cash. real
I
collection
just
ends
read
up with the next customer order.
Andre, I just read in the comments that Suzanne, she said positive ending to me means payment. I can relate to that. I mean, for me, in my time as a when I was in active credit control, I found it always very important that at the end of the conversation that I at least had something that is tangible. You know, where people say, okay, are you able to pay today or tomorrow? And if you're not able to pay, so when are you able to pay? And what is the reason? What is the reason why that's not possible? But you know, in those days, I was working with a weekly aging list, and I worked with 3 colors: with red, orange, and green. And everything where I had a positive result in terms of customer promising to pay, let's say in 2 days, I made it green, and I put a small arrow next to the amount with the date that the customer had promised to pay. And then orange, there was some minor trouble in between. Maybe there is an issue with an invoice, or something has not been done by the supplier. And then you have red, and red is troublesome. And the trick was actually in this weekly aging report, and I did that every week from our system, from our ERP system. Every week, I got all the customers on, let's say, 7, 8 pages altogether with their complete balance, outstanding balance. Yeah. And if I saw a lot of white on the right side of the sheet, it's a very manual methodology, by the way. Yeah? But if I saw a lot of white, that means that all customers are paying on time. And if I see a lot of red on the right side, or overall I see a lot of red on this all these papers, then I know I'm not doing a very good job. I need to change something. Well, so as a result, and I've done this work, by the way, for 9, almost 10 years in both customer service and credit management, so credit control.
Well, I must say that you in Western Europe reached riches, because when I started my credit management career in Ukraine, I only had black and white printer. So
yeah, me too, but I had colored pencils, you know.
Okay, Marcel, I promised to release you at 4 p.m. It's already 4:03. Susan, maybe you got a question. If you would like to interrupt, or I will stay with you for another 5 minutes.
Or you can still, I still have a little bit of time.
Yeah, Susan, okay. I believe you wanted to say something. Please unmute yourself and ask your question.
Hi, it's been very interesting. You know, South Africa, I think, is a different kettle of fish sometimes. Our clients over here are exceptionally demanding, and we have had to consider how they can pay instead of how we can afford to have them pay, which has put us in a very difficult predicament. But it's been a question of either we become flexible or we lose our client base. So it's been challenging, and you say we've got to look at our product, we've got to look at the prices we're offering, we've got to look at all sorts of things to try and make this happen so that we can extend those credit terms in order to keep our customers.
Sure.
I love your color-coded thing. I'm actually going to implement that. I'm going to definitely try that.
This is free.
And I hope I can get hold of your book. It's going to be very interesting to read that.
Yeah, it's available. Let's say Andre is one of the first people, international people I worked with for a dedicated version. There is a second edition. It's not from the Eastern Europe edition, but it's actually from the United States edition. So basically, the concept of happy customers, faster cash, that's still my idea. Is I write a generic book about customer communications in credit management. That's the book is about. So happy customers paying on time and making sure that they pay on time. That's the basic idea. And then I worked with all kinds of credit managers from several countries around the world. You know, it just for me was also a kind of, I would not say it's a hobby, it's not a right word, but I found it very interesting to exchange ideas with international people, international credit managers who are also have the talent to write and are interested to spend a little bit of time to write about credit management and culture, business culture in their own country. So the United States edition is the best one, and you can it's available for 20, something like I need to adjust the price, by the way. It's available for €25 online on my website. I will share the website with you. And you can download it as a PDF.
That'll be great. Thank you.
Yeah. So I will share the link with. Well, I can already share it, but I need to let me remind you that I need to adjust the price. Hold on for a second.
Well, Marcel, you can send it to me, and I will send this link together with record of today's event. I will send to everybody, so it will be delivered to everyone who registered for the event.
Oh, okay.
Okay.
Then I do it like this, and
okay.
Yeah. So that's good.
And,
thank you.
Yeah.
So thank you very much for today's event.
Yeah, it was a pleasure, Andre, to see you again, and Suzanne and Marta for being attending this meeting. I mean,
Susan, thank you very much for joining us so actively, and to every one of you, ladies and gentlemen, I wish high sales, low losses, and what is said in French-speaking, could be said in French-speaking environment which is surrounding me. Bon crédit.
Yeah.
See you.
Yeah. Okay. Hartelijke groeten. See you later. Bye bye.
See you.